All right, everybody, it's a little past 6 p.m. I'm David Edwards, president at Heron Wealth in New York City. I'm planning to keep this webinar on the short side tonight because I don't know where you are in the world right now, but here on the Eastern Seaboard, it is absolutely gorgeous. Beautiful summer day in June. Today, we're going to talk about four things. We're going to talk about the progression of the coronavirus. We're going to talk about the labor report that came out on Friday, the continued baffling rise in the major stock indexes, some comments on the current US political situation. It's been an interesting week, and then maybe 10 minutes answering questions. I got a couple of questions that came in over email earlier today. There's a chat function and a Q&A function. Find that on your screen and send me questions and I'll answer them at the end. So let's jump right in. I'm going to leave the slides for a second and jump over to the internet so that we can look at our favorite website for the virus. And I can report a little bit of good news since we spoke last a month ago. For the world, things are still tough. 404,000 people dead so far. Throughout the world, cases still rising at a pretty brisk pace. But over here, daily deaths are falling. Kind of leveled off last couple of days, but they're falling from the peak earlier this year. And there might be two reasons for that. One reason might be the virus really is less able to transmit itself when it's hot rather than when it's cold, right? This thing started in December, January, February, March. Now we're in May, June, July. But also it may be that doctors have a better handle on how to treat patients that have the coronavirus, able to keep them alive longer. So that is a little bit of good news. We're not out of the woods yet, but things are better. In the USA, since Memorial Day, when we passed 100,000 dead, another 12,000 people have died. That is still the rate of 1,000 a day. That's not great. What's interesting is that the daily deaths are moving away from New York, New Jersey, where we were up to, I think, close to 500 a day at one point, and are now spreading out across the country. But again, you see Florida here, 12 deaths, Louisiana, 10 deaths, Texas, 6 deaths. Maybe warm weather slows the coronavirus down, or maybe people who live in the southern part of the United States spend more time in their cars and less time talking to people. So that could be some good news. Slide down to here. What we see is daily new cases. And there's a new tool now where we can see the 3-day moving average and the 7-day moving average. And what we see is some fluctuation around the 3-day moving average. And then you see that 7-day moving average is starting to flatten out and move up again. And that is not a surprise. We know that Memorial Day 2 weeks ago, a lot of people went to the beach, had cookouts, went to the bars. Parts of the country began to reopen. And the scientists predicted that coronavirus cases would rise, and that's exactly what we're seeing. But again, as I mentioned, it seems like we have a better handle on how to treat the coronavirus. Also, we're no longer overloading the hospitals of New York, New Jersey, Massachusetts. It's now spread out across the country. So the death rate is falling, but again, it's leveling off at about 1,000 a day, 950 a day, 800 a day. So that's not great. What's bizarre to me is that as a nation, it seems like we decided, well, 1,000 dead people a day is an acceptable loss for our society, just as 35,000 deaths via gun per year is an acceptable death rate for our society. And do the math on that, 1,000 a day through end of September, another 100,000 people. Maybe that's just what we decide we're going to do. Anyway, let's look briefly at New York versus Florida. New York, where I'm based, very aggressive approach to dealing with the virus, really beat this thing into submission. That is a beautiful chart. And that's the chart that we see in Italy right now. That's the chart we saw in South Korea several months ago. Daily deaths also way down from 1,000 a day all the way down to 50 a day, 82 a day. That's a big improvement. Parts of New York State are opening up again. Upstate first, New York City last of all, but it is reopening. We'll see how that goes. And then we go over to Florida, and where they are a bit more casual about these things. And we see new cases are definitely on the rise, so that's not cool. And we see that daily deaths at least are stable. So that's how it is, right? And down in Florida, it's 34, 35 people a day. It's not 50 or 100 or 1,000 a day. So that is the update on the coronavirus situation. Let's jump back over to our PowerPoints. So here we are, the June unemployment report, or the June employment report as it's officially called. Economists were expecting 20% unemployment. Instead, it fell 13.3%, down from 14.7%. Victory? Not really. Unemployment has not been this high as 13.3% since the 1930s. That's the worst number in 80 years. That's just awful. Number two, the gains of 2.5 million jobs modestly offsets the 21.4 million jobs that were lost in March and April. Number three, economists suspect that the true unemployment rate is actually still 3% higher. And the reason why is because a lot of people who are on furlough, who are not getting paid right now, but are still receiving benefits and still expect to go back to work sometime soon, don't respond as unemployed when they fill out their household survey. So it could be that as much as 3% of the unemployed are miscategorized. Let's see a few more reports before we really know what's really going on. So let's talk about the stock market. You would think that back in the fourth quarter of 2018, which was 2 years ago, no, a year and a half ago, there was a hint of a recession coming in 2019, and stocks fell 22% in 6 weeks, just bleh, and then recovered because there was no recession in 2019. Just the hint of a recession. So now that we're actually in the midst of a major recession with the worst unemployment in 80 years, with 120,000 Americans dead, more on the way, with cities on fire, with protests, with panic everywhere, what's up with stocks? They're just going higher and higher and higher. And specifically, the S&P 500 is up 45.7% since the March 23rd intraday low. And that is the fastest 50-day rally ever. And that is just 5.7% off the record peak of February 19th and down 0.3% on the year. The NASDAQ 100 is up 13% on the year. Ooh, that's an important clue. We need to look at that. We'll look at more of that in a minute. By sector, things don't look so good. This is the quarter date and year to date numbers. The energy sector recovering, but still down 24.4% on the year. That's oil, gas, coal, just crushed. Industrials down 7.5% on the year. That's turbines and locomotives and big machinery, just still way down. Banks, financials, JP Morgan, still way down. No way to make money in 0.0% interest rate environments, number one. Number two, big worries about will people start defaulting on mortgages, will they default on loans, just a lot of uncertainty for banks right now. What is doing super well is information technology and consumer discretionary. Information technology includes firms like Apple and Facebook, and consumer discretionary includes firms like Amazon. And here's the funny thing. Although there are a lot of unemployed people right now, because of the big checks that were handed out last month, $1,200 per family, plus enhanced unemployment benefits, average family income actually popped 10% for a couple months. So people went out and bought stuff. They had nothing else to do. That's the good news. The bad news is those unemployment benefits are running out pretty soon. That $1,200 check was a one-time check. So what happens, in a couple weeks or 2 or 3 months when people run out of money? So we have to be focused on that. The other thing that I don't have a slide for, but I'll point out is that although the large cap index, particularly the large cap growth indexes, are doing pretty well, the mid cap and small cap indices are doing a lot worse. The large cap index is off 5% from the all-time high, mid cap 10% off the all-time high, and small caps off 15% from the all-time high. And what that means is that the largest companies, the Amazons, the Microsofts, the Facebooks, have the financial resources to roll through this thing no matter what. You get down into smaller companies that people don't know about, they're not household names. Maybe they don't have the resources to get through, or maybe they are a driller that just, what's the point of drilling when oil is so cheap? So this healthy stock market is hiding a lot of weakness underneath. In particular, these 5 companies, Microsoft, Amazon, Apple, Google, Facebook, and actually Netflix, for some reason, these are the 6 largest cap companies in the United States, in the US stock market. Microsoft was number 1 in 1999, and it fell off the list for a couple of years. Now it's back on top again. Amazon, everybody's using Amazon. That makes sense. Apple, somehow still selling iPhones. Google, interesting. They've had some revenue shortfalls, but they're still up on top. Facebook, again, revenue shortfalls, but they're still on top. And Netflix, everyone's watching movies. So year to date, look at those numbers. Amazon up 34%, Netflix up 29.7%, even Google up 7.5%. Those 5-6 companies account for 21% of the value of the S&P 500, and they're dragging the rest of the index higher, even when a company like ExxonMobil is still down 35% on the year. Other factors supporting the stock market include 0% interest rates. We always talk about stocks only care about earnings, revenues, earnings, and interest rates. Well, right now revenues are uncertain, earnings are uncertain, but interest rates are 0. That makes the future value of cash flows from stocks more valuable. That pushes the stock market higher. The Federal Reserve is flooding markets with cash. Back in March, the corporate bond markets, junk bond markets, municipal bond markets utterly seized up. No one reads about that in the paper. It's not a commonly known thing, but literally you cannot buy or sell a corporate bond for a couple of days. And this Federal Reserve jumped in with trillions of dollars of liquidity and is making purchases and sales to keep those markets flowing. And that's popped asset prices just straight up. If you put enough cash into the system, prices will go up. And then lastly, what we call investor class psychology. So back in 2018, we were talking about that a few minutes ago, investors gotta be in their bonnet about there could be a recession in 2019. That's not something that average Americans were thinking about at all, but the investor class, the 5% of Americans that own stocks, got all upset about it and dumped stocks down 22%. Well, right now, the investor class are people like me that sit in home offices with food on the table and money in the bank and healthcare if I need it, and my family is secure. And this is not bad. I've cut way back on my networking. I have a lot more free time. I'm able to work out more, connect with my family. So for a lot of the investor class citizens in our country, this has actually been a pretty nice couple of months. It's been a nice break from the stress of their usual lives. And we've heard from a number of executives that have decided to take early retirement and make this thing a full-time job, or somehow keep working from home indefinitely. So if the investor class is not in a panic, then they're not dumping stocks anymore. So all that comes into play. Having said all that, I'm still concerned that the financial markets come back to the March 23rd lows. This chart is updated through Friday. Obviously the peak and valley over there on the right side is what we're looking at. Almost back to the all-time high, back to break even on the year. Looks pretty good. But what happens if we go from 1,000 a day to 2,000 a day? What happens if states have to start shutting down commerce again? What happens if investors take a serious look at the companies they own and realize that these companies have no profits right now and may not have profits for several years? 100,000 small businesses have already gone bankrupt in the last 3 months. That is a hit that will take a couple of years to recover from, and the stock market is just choosing to ignore it right now. So what that means is that we were net buyers of stocks during the panic of March, because when stocks are on sale, we like to buy them. We raised some cash for some clients in April if they needed it for various reasons, or they just wanted to take advantage of the rebound and maybe move some money aside for personal reasons. We added new clients in April, and we took them, we got them onboarded in May, and we were investing in them cautiously. Again, if the money you have is 5-year money, you're not touching this for 5 years, we'll put it in stocks. If you need the money in the next year, we're leaving it in cash. Not even too psyched about bonds right now. Normally bonds would be for cash flows the next 1 to 5 years. But if interest rates are at 0.0, they can only go up. And when interest rates go up, bond prices go down. So how can you make money in bonds right now? So just really sitting on our hands, want to get through July, August, September, get some more earnings reports to look at, get some more unemployment reports to look at, and then start making some real decisions. And really, we don't expect the economy to start rumbling again in the US until halfway through 2021. So anyway, all right. And now the topic that makes everybody super upset, politics. I'm going to spend 5 minutes on this, and then I'll take some questions. Every week I ask myself, could things possibly get worse? And every week somehow they do. And there's one guy that seems to be at the center of all this, one guy. Now, I'm a lifelong New Yorker. I don't know this guy personally, but I know by reputation for 25, 30 years. And I know that at heart, he's a business cheat, a bankrupt, an adulterer, a draft evader. I've learned that he's a Kremlin stooge. For sure, he's a liar. And we were reminded this past week that he's a coward. There were some protesters outside the White House, maybe 1,000, waving paper flags, paper signs or whatever. And he ran down to the bunker and ordered the Pentagon to send over 10,000 troops to quell the protesters. And thankfully, the Pentagon pushed back and said, no, Mr. President, that's not legal. So then the next day, he bravely ordered the park outside the White House tear gas so that he could bravely walk across and hold up a Bible for some random reason. And the next day he bravely went to a church and stood there in an empty church with Melania to make some point, I don't know what. And my conclusion is this guy has no idea what to do in the current circumstances. He doesn't know what to do about the virus. He doesn't know what to do about the economy. He doesn't know what to do about the protests. And it's interesting to me that this week, a number of Republican military and civilian people began to speak out against him. Today, Colin Powell, for example, flat out called him a liar on State of the Union this morning on CNN. Really, it's taken 3.5 years to get to this point. But anyway, so there's an election 5 months from now. And 3 months ago, you would have said that it would have been a slam dunk. Well, I wouldn't say a slam dunk, but it was going to be an easy win for Trump based on the Electoral College. And now the numbers have changed dynamically. So I'm going to just throw up a couple of slides and show you what has changed that's very interesting in the last couple of weeks. First off, if you're a pundit nerd like I am, you swing over to 270 to win. And right now, Right now, the consensus of all the major pundits, which is Politico, and there's about 8 of them, is that the Democrats have a lock on 232 electoral votes. The Republicans have a lock on 204. There are a bunch of unknowns, and we think Arizona will go for the Democrats. We think Pennsylvania will go for the Democrats. We think Michigan will go through the Democrats. On that basis, if those 3 states went that direction, then Trump would lose. What's interesting is that Wisconsin probably also would go for the Democrats, possibly North Carolina, possibly Florida. Okay, but that's just one person's opinion. So let's see what other resources we can look at. All right, here is a different kind of chart, which is based on a betting site called PredictIt. And PredictIt compiles bettors' votes, not how you're going to vote, but how you're going to bet on the outcome state by state, and then sums it up at the whole country level. And PredictIt actually has Biden winning in a landslide. Florida, Arizona, Minnesota, North Carolina, all the states that I'm not sure about. Right now, people at PredictIt think it's going to be Biden, not Trump. And you can actually go over to the PredictIt website and look at it side by side. And why is this way of looking at the election more valuable than looking at polls? Well, first off, polls always lag reality by about 2 weeks. We won't really get a clear update on Trump's approval until about a week from now. But the PredictIt thing is real time. And until a few weeks ago, Trump is on top here the whole way through. And then just recently, just after Memorial Day, as these protests began to kick off, suddenly he fell down. So that's interesting. That's the first time in a while he's been behind Trump. Okay, so fine. So that's polls. And then another way of looking at it is to go over to Real Clear Politics, where they also are compiling polls on a real-time basis. And they have one version of the polls based on, hopefully this comes up, based on all polls. All of these gray polls here represent polling where the numbers are just 2 or 3% apart, less than 2 or 3% apart. But if you take out all the toss-ups and award all the states based on who's ahead, who's behind, again, Biden crushes. Is that is this thing over? No, it's not over. There are 5 months to go, 5 more months to go. And, I'll tell you, everyone knows I'm not a Trump fan, never have been, not from day one, not even before day one. But we do have clients that are Trump fans, and we talk to them respectfully because that's our job. And the one question I always ask is, all right, if Trump worked for your business or your school or your church, how quickly would you fire him out of self-preservation? And the answer is, oh, I never could hire him in the first place. I'm like, okay, that's the only thing I want to know. That's the one thing I want to know. And so, the question comes up on November 3rd. Does Trump get to spend 4 more years trying to rebuild the mess that he's created? Or do we just assume that he's not capable and maybe turn it over to Biden? Oh, who, by the way, had experience cleaning up after the last Republican administration in 2009 when he was the vice president. So I'm going to conclude with this, and I'll take some questions. If you are a Democrat in November, then you're going to vote for Biden. And if you're a Democrat in a safe state, I recommend that you reach out to friends and family in swing states and ask them to vote also, and also send money to voter registration drives and to other politicians that maybe oppose Trump and might help get our country back on track. If you are a Republican who's worried about rebuilding this country and don't trust Trump anymore, well, then vote for Biden. And if you're a Republican who can't bear to vote for Biden under any circumstances, then write in Pence. And now, questions. And I'm going to jump over to the Q&A. And the first question I'm going to answer came in via email earlier today. The question was, with stocks way up, should we start moving more money from stocks to bonds? And as I mentioned in my commentary right now, not a big fan of stocks right now because they're pretty well elevated, could fall, and not a big fan of bonds right now because as interest rates start backing up 2-3 years from now, bond prices will fall as well. So pretty much myself and my portfolio team went through a process of evaluating every family's portfolio in April and May and made adjustments where necessary. And I feel like we have the right portfolios to get through the next 12 months, whether the markets go up or down, and then we'll reevaluate with new information 12 months from now. So not buying bonds right now, not buying stocks right now, just kind of waiting for more useful information. The next question is, what are the major risks imposed from Asia, specifically China, on the economy? So I'm not going to answer what are the major risks imposed from Asia because I just saw that question and there's a lot of research I would have to do to give an adequate answer. But I'm going to say this. 25 years ago, the US economy was about 25% of world GDP and China was about 2% of world GDP. And right now, the US economy is 15% of world GDP and China is 15% of world GDP. And I always used to say I was never worried about China surpassing the US as the largest economy until they began making MRI machines. Well, now they make MRI machines, number one. Number two, the US economy is going to take a much bigger hit from this coronavirus thing than China did. Yes, it originated in China. Yes, they lost 40,000 people. That's out of 1.7 billion people. And the economy slowed down somewhat. It's still growing. Our economy, really hard to say how bad the hit is. Are we down 5%? Are we down 7%? Are we down 9%? But a year or two from now, we will look back and recognize that this year, 2020, was the year that China passed the US as the world's largest economy. Next question was, if Biden wins, would it be soothing politically? What impact on the markets? Would you suggest taking cash out before the elections? Again, no. We kind of feel like the election could go either way at this point. Maybe it's Biden, maybe it's Trump. But really, the market cares less about who the president is and more about earnings and revenues and interest rates. And that's what's driving our investment process, is how we feel interest rates are going to play out. I do feel that if Biden did win, we could all just relax a little bit for a couple years and not be at each other's throats. I was a child in the 60s. I don't really remember too much specifically what was going on. This time seems as troubled as it was in the 60s with assassinations and rioting. And then you have to go back to the 1860s to find a worse time where Americans actually took up arms against each other. And I think that we approached the brink of having our American military take up arms against our American citizens this past week and start killing people in large numbers. And thankfully, people at the Pentagon stepped in and said, no, this is not possible. We cannot do this. But that's kind of a knife edge also. What if Trump knocks out the current Secretary of Defense and puts in somebody more pliable? It's a risk. So I think that having a Biden presidency will let us chill out, relax, do a lot of repair. In a future commentary, I've got a long laundry list of things that the next administration has to do to fix our economy. And we'll talk about that at a future date. So it's a lovely day, and we are ahead of schedule, which I always appreciate. So I bid you a good evening, and I hope to come back to you soon with better news.